Bitcoin Cash is currently facing a period of stagnation as it struggles to overcome the $540 resistance level. The overall momentum has slowed down significantly after a brief attempt to push higher earlier this month. Investors are now closely monitoring the price action to see if a reversal or a deeper consolidation is imminent. This stalling behavior often indicates that the buying exhaustion has reached a critical point for the asset. Without a fresh catalyst, the price seems destined to drift toward lower liquidity areas to find support. Market participants are increasingly cautious as the broader crypto market shows signs of localized fatigue. Consequently, the technical focus has shifted toward identifying the next major structural flaw for Bitcoin Cash. The $540 mark has proven to be a formidable barrier that the bulls cannot seem to penetrate easily. Every attempt to reclaim this territory has been met with aggressive selling pressure from short-term traders. This rejection suggests that there is a significant supply cluster sitting just above the current market price. As the price bounces off this ceiling, the probability of a downward correction continues to grow day by day. Technical indicators are beginning to show bearish divergences on the smaller timeframes near this specific zone. For a true bullish continuation, Bitcoin Cash would need to close decisively above this level with high volume. Until that happens, the path of least resistance appears to be skewed toward the downside for the time being. One of the most critical technical elements currently under observation is the fair value gap (FVG). An FVG occurs when there is an imbalance in price action, leaving behind a zone of unfilled orders. In the case of Bitcoin Cash, this gap exists between the $475 and $490 price levels. Markets have a natural tendency to return to these inefficient zones to rebalance the price discovery process. This magnet effect is what is currently drawing the attention of professional swing traders and institutional players. Understanding this mechanism is essential for predicting where the next major bounce might realistically occur. As Bitcoin Cash loses its grip on higher levels, the 490 range becomes the primary target for market rebalancing. This specific range between $475 and $490 is not just a gap but a potential fortress of demand. Historical price action suggests that this area has acted as both a support and a pivot point in the past. If the price reaches this zone, we expect to see a surge in buying activity from long-term participants. Filling the FVG allows the market to establish a much healthier foundation for any future upward movements. It serves as a classic buy-the-dip opportunity for those who missed the previous rally earlier this year. However, the strength of this support will be tested by the overall sentiment of the wider Bitcoin market. If the support holds, it could provide the necessary fuel for a renewed attack on the $540 level. Looking at the Relative Strength Index (RSI), we can see that Bitcoin Cash is cooling off from overbought conditions. The MACD histogram is also starting to print smaller green bars, indicating a visible loss of bullish momentum. These oscillators are confirming the narrative that the market needs a healthy breather before moving any higher. Moving averages are still trending upward. but the price is currently overextended relative to the 50-day EMA. A retracement to the 475 at 490 FVG would actually bring the price back in line with its long-term moving averages. This alignment is often a prerequisite for a sustainable and long-lasting bull trend in the crypto space. Without this correction, the market risks a much sharper and more chaotic collapse further down the line, beyond the internal technicals. External macroeconomic factors are also playing a significant role in Bitcoin Cash's performance. High interest rates and fluctuating global liquidity are causing investors to take profits on hambatan assets like Bitcoin Cash. Whenever the broader market enters a risk-off phase, Bitcoin Cash tends to suffer more significant pullbacks than its larger peers. The correlation between Bitcoin and Bitcoin Cash remains high, meaning a BTC dip would accelerate the BCH drop. Traders are keeping a close eye on the Federal Reserve's upcoming statements regarding global economic growth. Any sign of economic tightening could push Bitcoin Cash straight into the heart of the 475 at 490 FVG. Conversely, a dovish stance might provide enough liquidity for a surprise breakout above the $540 ceiling. For active traders, the current situation requires a high degree of patience and strategic discipline. Entering a long position right below a major resistance like $540 is often considered a high-risk gamble. The more prudent approach involves waiting for the price to retest the identified FVG zone for a better entry, setting limit orders within the 475 at 490 range could allow for a much better risk-to-reward ratio for investors. Stop-loss orders should be placed carefully below the $470 mark to protect against a catastrophic breakdown. Monitoring the volume profile within the gap will be essential to confirm if buyers are truly stepping back in. Navigating this stall requires an understanding that markets move in waves rather than straight lines. In conclusion, Bitcoin Cash is currently navigating a complex phase of its 2026 market cycle. The stall below $540 is a natural part of price discovery and should not be viewed as an immediate failure. By focusing on the 475 at 490 FVG, investors can prepare for the most likely scenario in the short term. This rebalancing act is a healthy sign of a mature market that is building a sustainable long-term structure. Whether Bitcoin Cash breaks out immediately or takes the scenic route through the FVG, the trend remains a point of interest. The coming days will be crucial in determining if Bitcoin Cash can maintain its status as a top-tier asset. Success will depend on the bull's ability to defend the gap and eventually conquer the $540 peak.